JB here, JB here. Hope everyone's doing outstanding. Let me just fix this here. Friday, October 17th, 3:25 on this fine afternoon talk. Really quick about the market. Some names I'm looking at go from the S&P futures right at the highs here, up 0.7%. Big reversal from this morning. Markets were, futures were off over 1% overnight. No big catalyst, no news. There was no, economic data, nothing in China, no crazy tweets or what have you. Just a sell-off, and opened somewhat flat and then just chopped around into the I guess late morning. Then you had POTUS making some comments, some positive ones around China. He's meeting with Zelensky and at the White House, and then markets just ramped and up here at pretty much the highs of the session. S&P will be up, I think, 1.7% this week. So last time, last week, around this same time, we were dealing with the China-U.S. trade war. It was back in the limelight, right? Trump threatening on Truth Social 100% tariffs or whatever by November 1st. And here we are. And it seems like that's kind of like all the way in the rearview mirror. No one's talking about that anymore. And I guess they'll have the meeting and everything back to normal. But unfortunately, what that just frustrating when you're on a Friday, options are expiring or what have you, and just see premiums crush this. I think, I don't know how big that reversal was. Anyway, uh, but outside of that, next week we still have the government shutdown. So those headlines over the weekend, and then earnings season. Tuesday we have Netflix, Tesla, IBM, and then there'll just be more conversation, right? With the capex spend, we have the Oracle AI world, and then their analyst day. Uh, it's the word, the bubble word just keeps coming up. And today, not even say today, but now, gold was selling off here today. So it's funny. It kind of drives me nuts that I wouldn't say that the bubble word is used loosely, but it just seems like same with comparisons with with bubble with market crash and all that. Everybody likes to use comparisons. The financial crisis, they like to use that just loosely, right? So who was it earlier today talking about gold being in a bubble, right? And you take a look at gold, and for it to move 2% is that's a huge move for gold. It rarely moves that much. So um, and even when it does, 2% is not really that big in the whole big scheme of things, right? To me, if it was down 7, 8, 9, 10%. So today, of course, gold has a little bit of pressure, and for whoever it was, I forget the person, but it's in a bubble, right? But anyway, I'll talk about gold in a second. But anyway, overall markets, I'm not going to sit here and pat myself on the back. I am not a market technician by any means, but I use charts as a guide, right? And that 658 spot, that was the first trend line I put in for over a month or so, and it hit every single day this week and came right to 658.14 here today before bouncing. So I mean, call me crazy. So and I don't use the chart as the be all end all, right? It's not the map for every trade that I make. I don't do it just based on charts alone, but it's part of the toolbox, right? I mean, you have technicals, fundamentals, market sentiment, macro situations, all that plays into the market. But it's always nice to have some things to help guide you on your journey. And I mean, take a look at the SPY today. But anyway, so it's that 658 huge spot. Next week, we'll be watching 665, which we're at right now. I talked about this morning being possible resistance. Here we are at 665. And then if we do have some more shenanigans next week, 553, right? 653. That, I mean, again, that just like the 658, 653, we came all the way down to last Friday, on Tuesday, again yesterday. So that's kind of like the overall market. I'm trying to, it was funny too, overnight and then this morning when the futures are dipping, looking at the VIX, and the VIX was up like 2%. I'm like, that's like a drop in a pan on a big move. You would think it would have been the VIX would be up substantially higher, and it wasn't. So it was kind of like a tell. But anyway, today, I wouldn't say frustrating today, but to me, I would love to have seen a big gap and pull at the open, and then kind of like just a face ripping bounce and squeeze. And when we got the move here, I mean, we're up 0.7% on the SPY, but to me, I would prefer to see like all the way down to, the 653 or so, and then a reversal. Unfortunately, I didn't get that today. But anyway, so that's kind of the overall markets. So quick, I mean, first I was just talking about the gold trade. I haven't traded gold in a couple months. And then, if you've listened to my rants over the years, I am not a gold bug by any means. I always take this with a grain of salt, right? Gold should. I'm not a registered investment advisor, right? But gold is always good to have as part of your portfolio, whether it be 5%, whatever it is. So I don't want to take away from gold's importance or whatever. But I always look, and for me over the years, I look at gold as what it was, and it's a store of value. So to me, there's other things out there now that take a piece of that store of value, kind of what you give gold credit for. So I've always looked at gold that to me, I always think it's somewhat overvalued. So whenever I look at gold, I'm always tempted to get put. So thankfully, I've been sitting on my hands, and this epic rally this year, whatever's up 50 something percent now. But at some point you have to think, and I'm not saying it's a bubble, right? To me, I don't think you can call gold a bubble because it's not. It's totally different than any other asset out there, pretty much. But I do think there's opportunities for pulls, and if it does get some kind of pull, it might at some point pull 7-10%. And if it happens in a very short period of time, you can make a lot of money on the puts because there's the implied volatility on gold is very small, especially GLD puts or what have you. Although those premiums are higher than historical measures. But anyway, so needless to say, finally today, I went and got some dust calls. I haven't been in dust in a while, and I actually had a split. So the liquidity and stuff on the spreads on J dust and dust have been tough to trade. I was looking for some decent risk reward trades and finally pulled the trigger on some calls. Here's a name. If you look at dust, I always talk about dust as when I get there's two ways to make the money on the dust calls, right? Because it's the miners and it's inverse. So as gold miners sell off, dust goes higher. Uh, so the two ways, obviously, the market sells off, right? Then the miners are going to sell off, so dust will go off. And then if gold sells off, because typically the miners move, I wouldn't say they move in lockstep with gold, but typically when gold goes down, the miners go down. So when you get both those things happening, it's like a double whammy, right? So anyway, I'm just going to hold on to those plenty of time. I've had the November strikes, inexpensive, and you take a look. I don't even know if I have the dust chart here. I thought I did. Maybe it's at the bottom. But I mean, it's not like dust wasn't. Well, I don't. Here it is. It was only a couple of weeks ago. Is it $13? So not. Let's see here. Here it is. Okay. So I don't think it will take much for it to get back up there. I looked for some inexpensive risk reward strikes. The November 13s looked the best for me, so I got those. And of course, if it continues to run next week and the week after, I'll look to lock some in to cover costs for 100%. So that's dust. Quick on the flip side of some names, like I was talking about getting the dip at the open. Oracle, right? It was 317 when I got the puts yesterday afternoon. I was on the rant. I think it was 315, and I have the 290 puts. They expire in 24 hours. I mean, it's almost like crazy to get a trade like that when there's no true catalyst because they had already announced their numbers at Analyst Day. So, sure enough, Oracle gapped down at the open. I mean, it was 305 overnight, then 300. Then it was bouncing around, and then it just sold off after the open. So to me, half of me wants to hold on for the bigger move, and the other half is okay. I didn't expect them to be up a lot. I was hoping to close out flat if you're looking reading the watch list. So I was able to take some off for 100%. Then it just kept sliding. Do I lock them all in? Do I lock some more in? So I locked some more in for 300%, and then it's like bouncing a little bit, right? So I thought if we have a pull here on Friday morning, usually we have a reversal. So I figured at some point Oracle's going to have some face ripping rally. So I closed the last out. And then sure enough, it hits 294, sits there for a bit, and then just starts tumbling some more. So I'm like, this might be one of those where it starts to revisit 285 or 280. So I went and got some more spec lottos. It kept dipping. I locked some more out for 50%, and then I held the rest. And unfortunately, then I found a bid. Another name I'm going to continue to trade. Here's the thing, right? And, I make some jokes about the RPOs, right? And, to me, when I think about RPO is like a football term. It's a run pass option, right? So to me, the thing that always, when people talk about bubbles and equities and things like that, it would be about like deferred revenue, right? And that's pretty much what the remaining performance obligations rings to me when I hear this. And that's the big selling point, or at least buying point for Oracle when they announced that $500 billion of RPO. So it's probably going to remain volatile. I'll continue to look at Oracle next week too, because to me, if there's just decent earnings next week, there's not much in way of headlines. It's a name that maybe gets back up to its 345 on earnings, right? So that's a spot I'll continue to look for opportunities to trade that. But that was the thought process there. And same with Broadcom, right? It was dipping. I figured if Oracle's selling off, Broadcom's going to tumble too. Got some of the 332s, couldn't get premium build. It bounced, closed those out. Then I went with the 335s, able to lock some of those out for 100%, and then it bounced. So another name I always look for protection. I can't say the P's good enough, tongue twister. So that was that. All right, so that's those names. Now let me just quick on Serve Robotics. I was actually looking at some November 24s. I mean, the premiums have come out quite a bit. I mean, you take a look at start of week. I mean, 2 days ago it was up 17% on a week. Now it's in red, sitting here at 1427. To me, again, I look to the future. I think it trades into the 20s in the coming weeks. Remains volatile. Uh, for now, I kind of want to see follow through. So maybe I'll wait for Monday, Tuesday before looking to get some more strikes because obviously they're on sale here. Stock's down another 7% here today. And unfortunately, you look at a name like Joby, and Joby's kind of like bouncing a little bit here. So I would have thought with the market kind of holding ground and bouncing in the afternoon, it would rally, but small caps are down nearly 0.75%. So maybe that's some of it. That's Serve. And then, I don't want to go too much. I was actually looking at Intuitive Surgical for premium building into their earnings next week. It's up 3% here. And you take a look at the chart, it's off substantially over the last couple of months. I don't know why I don't have it up here, but I think it was in the 500s. I know Johnson & Johnson's coming out with their robot. So I don't know. That's always been looming as a possible headwind for Intuitive Surgical. Maybe a name I'll trade Monday for some premium build. I think they report Tuesday after the close. And then last but not least here is SanDisk, right? So, I don't know, it was yesterday, day before. I keep talking about this oh shit basket, right? Names that I think are going to offer great opportunities if when the market pulls, especially some of these names have went on epic runs. And then I look at a SanDisk and it was 110 and 120. And you start looking, hey, you look at a chart like, wow, this thing looks like susceptible to a major pull. But then I'm looking on the flip side, I'm like, maybe this is just on the cusp of doing like another 100%. I don't have the chart here. But you look, it's like a 20 billion valuation. It's like one of those, company has been around forever, similar to the Seagates and the Western Digitals. But maybe it's like this is its time, and I don't know. So I have to do more research over the weekend. I was looking to possibly play some lotto calls today, but the spreads are tough on the weekly strikes and the increments only $5. Wait, do I have that right? No, actually they were. I don't have the right things up here. Sorry. All right, but it looked tough on a risk reward basis because it was at 150 and it doesn't have 151, 152. It was only $5 increments. Thankfully, I didn't play those because it faded. And then once it got under 140, I was looking for more lottos and I was going to get some more weekly lottos. I'm like, let me just go out to next week because if it continues next week, I see it trading could be 10, 15, 20%. I think there's a $10 implied move right now. Let's see. $15 implied move on the stock. So over a 10% implied move with no catalyst, right? So to me, it was $150 early in the day. If it gets to 150 Monday or Tuesday, the call is going to be a couple 100%. So that was a thought process. Got the spec lottos. I'll hold on to those. And that's it. I'm out of breath, folks. Let's have a great day. Have a great weekend. I'll be back rock and roll.